Welcome to Trading Lounge and the Commodities Report, and starting with the 10-year yields here on a weekly chart, we can still see quite clearly that we need to come down for wave 5 here. So that's still a lot of weeks to move down. So while this is moving down, the yields will be moving up, the dollar will be moving up. That's going to place pressure on the gold and silver. Even though the gold and silver is rallying at the moment, I feel like it's just a corrective rally. When we come over to the 10-year yields over here, or the 5-year yields, like runs a bit cleaner. I think probably people will be thinking a bit more short term these days. So a very clear 1, 2, 3, 4 here, and as I've said before, you can see the size of wave 1 and the size of wave 3. The wave 3 has the extension in it, so wave 1 here would be roughly the same size as wave 5. So you can see that there's more to go here. There's always problems at old highs. Double tops are never the end of the trend. Sure, they can drop back, but they're not the end of the trend. So we don't have that 5th wave in here. And on the daily here, we can take a closer view of this. So, unless things change, the bonds down, still got weeks and weeks to go, months. This has still got a long way to go up here for this. So, yeah, and the other sort of shocking news really with this is that because we have this 5 waves here, we'll get some type of correction after 5 waves in 3 waves, of course, and then we'll get another 5 up. So people talk about tough times now or whatever, but once this is peaking up here, you want to make sure that you have assets, and want to make sure that they're paid off at that point. So you've really got to the top here and the rollover here before we see some real damage done over here. But I'm not an economist, but when do they get it right either? So anyway, in the meantime, this is just going to push higher, and it's just not done there yet. And the dollar's doing the same thing here too. The USD here, the DXY, it's at 105. There's headwinds here with the old resistance here. I'm still expecting a little, just counting, I won't go into it, but basically there's just another little wave structure up here that needs to come, and then we'll see a larger correction unfold at this level here. Now, wave 2s can be, they can be 30%, they can be 40%, they can be 50%, they can come right down to the bottom here, wave 2. So anyways, it's always had a pretty tight trend. So I'd imagine it will keep it reasonably tight, but it will make a showing. It will leave this trend channel here and cross over and then make a move to the upside. It's either that or we put wave C top in here as an A and a B and a C, but I don't really think that's the case, because I can see that the yields need to push up further, and for quite some time. So I think we've got a pretty tight event that's going to occur in here, and then move up from that point. But while all this is going on here, it's going to give gold, and it has given gold and silver a bit of a breather, and some of the other commodities as well. I mean, every dog has its day, and lithium, has been sold off quite strongly. We see uranium pushing to the upside. Copper's kind of, Dr. Copper's sort of floating in the middle a little bit. Probably see more downside first. But anyway, that's the dollar. The trend is still to the upside, that's all really. So that's that. And then we come over to gold here. We are seeing some sort of rally here, as you know, and there's 2 ways we could look at this. As I mentioned, we can look at wave 1 here with an A and a B and a C wave here, and that's the end of it, wave 2, and this is wave 1 and 2, and we keep building to the upside. But it's pretty hard to see. I mean, gold has been diverging from, this has been rallying in certain instances here outside of the US dollar, so they're not quite in sync, but they could, things can be in sync for a while and they slightly move out and then they come back and those sorts of things. So I'm aware of both situations, and we are long at the moment. We'll probably get stopped out in this correction here, but we'll talk about that in a moment. So we could have some other weird correction going on in this space here, which would leave us. The thing is that this counts quite nicely as an ABC pattern here, so as a corrective, so we should take the top out here, so we should see some sort of ABC up here. Like I said, if we do get 5 waves up here, then it still doesn't mean that we're bullish at that point. We'll have to take the top of those 5 waves out for this to be an A and a B and a C up here as well. So I won't go into a whole lot of counts here. I'm just going to go into the intraday here where we've got some trades, and we'll just keep it on the intraday at the moment. So yeah, so we counted this up here as 1 and 2, and then 1 and 2 here, and 3 and 4 and 5 here for this, and then 3, 4, 5 here for this. So we could look at this as an A wave and a B wave here. I could also just remove this and put this wave 5 up here and go 1, 2, 3, 4, 5, and put this as an A wave up here, just to shoot the breeze a bit. So this would make the B wave over here. So instead of having this pulling back here, we could end up with a situation where we've got this and this here, something like this before moving up. The other thing here too is that we're at group 1900, 10, 20, 30 make up minor group 1, and this is really significant, this 30 here. I always see 3 as one of the strong numbers, 1, 5, 8 and then 3, and what I'm seeing here is the arrival and the reaction here, and then the first high above the level here is telling me that it's a classic trading levels pattern. So we should normally get this, this and this, and then push up at that point. It can sit on here and go straight up. The two patterns are, if it was just going to sit where it is here and go straight up, it would look like this here. Let me just drag this in here. So it'd be like this here. So I would need to take out that top there. The other pattern, of course, is that it drops back below the level here. This one here, where it drops back below the level here rather than just that top area there. So both of these are quite feasible at this point. So just looking at this on 100. So we've got this long position here. We've moved the stop up here. I could count 5 waves. This is a little bit tighter here. I can go 1 and 2 here, then 1 and 2, and then 5 waves here for 3, 4, 5. I could also look at this as a correctional pattern across here and push up higher here. So there's a few different ways to count this, and like I said, I can go 1, 2, 3, 4, 5, which we were talking about yesterday, and looking for it to come back to the 61.8%. So it's done that, but it doesn't mean that it's finished. We could get some sort of ABC pattern here, hitting supply and then going down at this point and then coming up. So there's a half a silly chance you could get stopped out here for this. So yeah, what to do? Well, then it becomes just a sort of numbers situation. Obviously, staying in the trend carries more risk, but it also has greater rewards as well. So you could wait for this to expire down here. You could take some money off the table. So let's just say that this move here, if we just take a middle of the road approach, which I always kind of like anyway, but everybody's a little bit different. So we could take a percentage off at this point here, and then leave the other one to be stopped out in its own time and in its own way. You know, we'll see how that plays out. Or you can just take it all off, doesn't matter. You know, I can't really go long until to take, you know, I mean, you can have a long trade above here. This just looking at the trend itself. So you can have this here as a long trade. So we'll just put this in. And the thing is let's just assume if the market goes straight up here, you can go long, because we've got 5 waves here and we should be pushing up, and the target will be 50 up here, okay? Now, if we get a second high here, and we don't know that yet, but if we do get a second high here, right, and then drop here, then you can bring that down to this high here. you can improve on that. So that would be this particular pattern here. So that would be the second high here. So currently we're here. We could bring it down to this high here. And then we could also rework it over here on the long side at the 1930 as well. So you could work it again over here and bring this down way over here. If there's a little classic trading levels pattern in here, that's what I would be doing anyway. But you'll need to handle that yourself. But that's that. That's sort of just taking the middle of the road approach. You know, it's nothing fancy, and everybody's a little bit different, and so on and so on. But there you go. Now silver's been playing a bit of a tighter game, so we're in the poo with silver here. So let's just look at silver for a moment. So we've done the same thing here, but we've got this other trade up here. So we've got this one and this one. If we get stopped out here, then we end up being breaking even. The reason here, it does look like we've got 1, 2, 3, 4, 5 here coming down. So I think that we'll come down, have a bit of a bounce off here, and then come back up and hit supply and then go down again. So I don't mind breaking even or having a small loss or a small profit. You know, it's just part and parcel. You know, I mean, basically out of 10 trades, it's basically 2 of them will make you all the money. You know, the other ones will be small losses and small profits. So 10 trades, 5 winning trades, 5 losing trades. That's pretty good if you can get that sort of consistency. And if you're risking, you know, 1%, well then it makes it a little bit easier. You'll have 5% losses out of those 10 trades, and the other 5 winning trades, they're not all going to be successful. They're going to be break even, make a little bit of money, and hopefully if you've behaved yourself, then a few of them will run. And you know, this is the 80-20 principle, so to speak. So yeah, it does look like we're going to get this here. So I think we could pretty much, you could either ride it out or you can get out, but you should be able to get out back up here somewhere on the bounce, because there will be a bounce here. It just won't be that big, but whatever it gives you, we should take, you know, and you might get this one back to break even, and then we'll be fine at this point. If something goes horribly wrong and this just keeps coming down for whatever reason, but it's a nice 1, 2, 3, 4, 5, and this one here is 1, 2, 3, 4, 5, so it's just about done here, and can push up at that point. Getting out here, it's not too bad. You can always get back in on the top of group 1 here, so the $20, $23 mark here, then 10, 20, 30, so top of group 1 here, you can go back in at that point. So yeah, if going down here, once you got your first low below the level here, then put the stop here. So it's not 1 point under here and you get stopped out. You have to wait for the first low below the level here, wherever that is here. It does look like the stochastics are sort of also suggesting that it's time to rally as well. So it may be a mistake of getting out, but it does appear to be 5 waves here. So I think we need to protect it from going down here, and we can look at getting back in over here and going up here. So it's just working the trend a little bit. It's just what it is. So uranium. So yesterday we had a look at the monthly and all the rest of it. And so the thing here is pretty clear that we've got this impulse wave here. And it's very clear that we've got a corrective pattern here. So that means someday in the future we're going to be taking out the top here. If this is wave 1 and 2, which seems to be right, then all of this is going to be wave 3 here. So we can view this in terms of looking at the length of wave 3, the old textbook style of things. Not my most favorite way of doing things. It's taking the length of wave 1 and then bringing that over and putting it on to, this wave 2 here. And this will be the 61.8%. So technically, looking at things, wave 3 could come up to this point here, and then we would have wave 4 at that point. And wave 4s are complicated, and 5 is the second strongest number, so it will probably be here for a while before pushing up again. But that's pretty much sort of it. So what we need to do next is look at getting 5 waves between in this space here. So we'll just So looking at this here, we need to look at 1 and 2, and we're going to have to really stretch the number 3 up here. The thing with commodities, they can extend in the 5th wave as well. So we'll probably have to build this up a little bit further than I've got it now. But so probably have to build. Yeah. Anyway, I'll look at. I always just start from the bottom and build up. You know, it's sort of like I'd start from the intraday basis and build out. There's a top down approach and a bottom up approach. The bottom up approach to me is pretty much working from the inside out and building the structure that way, starting from tick charts and building back out. But anyway, that's, you know, I mean, I don't normally do that and make people, you know, excited and all those sorts of, too excited anyway. But it certainly looks good. I you know, if, you know, I mean, I don't know. I mean, the worst that could possibly happen is that the length here is just the A wave here, and then we have a B wave over here, so we'll be at $40 anyway, you know, as an ABC, but we'll see. I mean, the base of all this is fantastic, and I mean, the pressure's on really now about, you know, climate change, and, you know, it's just not the old hippies like myself that are, you know, concerned about the situation. You know, I can see that a lot of the farmers are like joining up with their, you know, with the hippies. So the hippies and the rednecks are actually starting to communicate and talk to each other now, you know, because they're going through, they're both seeing the same problem, you know. So it'll eventually hit home a bit harder, but obviously clean energy like this is, be it right or wrong, is one way of handling it, I guess. So anyway, just stop Yak and Pete, get into gear. So from daily chart to weekly chart. So I just started to build it out here with the 1 and 2 here, and 1 and ABC for 2 here, and then 1 and 2, 1 and 2, 1 and 2. So I guess in here we can look at this as 1 and 2 here. I'll need to sort of do a little bit of work in here, but I think there's going to be some sort of there'll be some sort of thing like this coming in. This gap will eventually be covered. Will it come back and test this here? It'll be something like this here. This is an ETF. I'm kind of more interested in stock. So we did look at PDN and BOSS yesterday, and I don't know any in the US. So if anybody's got any US plays, I don't know the constituents even in this one here. So I thought I normally sort of gather them for the ETFs, but anyway, if anybody's got any, you know, sort of any of the 3 major ones, we'll tune into those, you know, because with the commodity section here, you know, if something's going to run, well, then we can look at it, and if something is quiet, like lithium is still, you know, pushing to the downside. So when we have a look at, just go to the commodities for a section here somewhere. So we can just use this one here. So let me just bring this in so you can see a bit here. We just want to go to the commodities, and which is the lithium, it's the uranium here. It's a bit hard to see, this is gone to here, but anyway, that's the futures contracts at COMEX. So we can put that on a weekly chart just here just to see that, because we've been looking at it here. This was another chart. Okay, we haven't seen this for ages, but that was the long trade going way back then. But I'm not here to look at that. I'm looking to look at the thought I had the, oh, here we go, lithium here. So this is lithium here, and this is the futures here, the COMEX. So it's still coming down through here, you know, it's still coming down. So the big Chinese plays here are still coming down as well. So I'm not that interested in them unless somebody's shorting them. So we're sort of out of the lithium play at the moment, and we're kind of a little bit more focused on iron ore and iron ore and copper here. So with copper here. I'm just going to go to the, I haven't updated that for ages, so don't worry about that. This is the daily chart here, and one of the things that this, when I look at the LME, the move up here appears to be corrective because this move down here overlaps this, but on the futures market this is above this one over here. But the LME is important. I mean, I don't know what today, but the LME had more volume than the US market, but I mean, all the big commodity traders in the world are all in Switzerland. Anybody that's anybody in commodities, they're in Switzerland. And it's a very private affair how things are traded through commodity people over there. So in the physical market, on the spot market. So it's who you know and keeping your mouth shut and all the rest of it. And Switzerland folks are good for that, but they're all the six of them, 9 of them. I mean, they're all over there, depending on which commodity you're looking at. But still, as far as the crow flies here, is that the move up here, I've labelled it an ABC pattern. Now I could be wrong, but as I've always said, we start from the top and we work down, and we could probably bring it down to this one here at the moment. But I'm not seeing any bullish patterns here just yet. Sure, I can see that we could look at that as 5 waves. We can look at this as 1, 2, 3, 4, 5 here. We could look at this as corrective. We may be able to squeeze 5 waves out of that. That looks corrective coming down. We could squeeze, another corrective pattern out of that. Doesn't look like 5 waves. So anyway, I'm just chilling here to see, if it clicks in here, because when we look at the XME over here, just remove this for a moment. If I got we can come back to that. The XME here, this is the one that's sort of doing my head in a little bit. No, it's not really doing my head in. There's 2 things I can tell you here, is that this particular pattern here is corrective, is bullish corrective, and at some point in the future this top will be taken out. And there's different ways to count all of this. I know that we're getting quite close over here now. It does appear to be a little bit bullish because we've taken out, this is the first time we've taken out a bit of a high over here. I mean, I could sort of view it as making another high and bring it bring it over here a little bit further and bring this down. But generally speaking, we've got that high, and this 50 is the balance point through all of this, and we're on the upside of the balance point, on the top of it. I can see that 5 waves. This one here looking a bit sad at this particular point in time. We'll see if it holds up and pushes up. But we can't go into BHP and all those guys until this is resolved. We're either going to get a move here and then a move up, or we're just going to kind of keep continuing to move up here. But this is not enough to, because I've got 5 waves here, that means I can get 5 waves over here, so I'll get a push up here probably. I can't turn bullish just yet on any of this. So this is kind of where copper is in its own way as well. And I think we also sort of compared this to the Chinese market yesterday and all the rest of it, didn't we? But BHP and all that's all pretty much like this as well. So it's just not finished yet, that's all. So there's not much I can say or do about this at the moment. So I'll just come to the energy sector. I won't look at iron ore. Nothing's changed from yesterday. So iron ore here, the XLE here, we've been looking at this as an ABC, and then we've been counting up here. So we've been looking for a top, and I haven't bothered pulling this part on the intraday, but basically the 5 waves are here, and we're seeing 3 days to the downside now. So we're at some sort of top. The question is it wave 1 top, or is it wave 3 top here? So the difference is a wave 4 will give us a smaller correction, and if it's a wave 2, it's going to give us a slight deeper correction. There's nothing really to say or do at this point. We've got these 5 waves here, 1, 2, 3, 4, 5. So that could be the wave 1, and we come back for wave 2. If we want to include this as 1 and 2 over here, then we'll need to look at this as wave 3 over here. So we've done all the right things at the right time. We've just been waiting for this to top and turn. This is also a classic trading levels pattern happening at a medium level here, the arrival, the reaction, the first high above the level. We're going to get some type of correction here, so we don't have to really worry about doing anything here. This is crude is the same as well, so when we go and have, okay, crude's fallen a bit further, so crude oil, so we've been looking from this wave 4 here, 1 and 2, 1, 2, 3, 4, 5 for the third, fourth, and 1, 2, 3, 4, 5, so we can just put that top in there now. So once again, I can look at it in various ways. It doesn't really matter at this stage. It's, what I'm seeing here is fantastic. It's all good. We're getting that impulse wave to the downside. And just coming back to the bigger picture here, we can look at this as 1 and 2 here, and 3 and 4 here, and then up for 5. So we can view that as 5 waves. Now this is what I talked about yesterday, that we've got a spike below here, but I believe, looking at the other markets around the world, that this can also be wave 1 here as well, and wave 2 here, even though we spiked just down below it here. It does count quite nicely as an ABC pattern here, by the way, and not 5 waves to finish that off. So we talked about that yesterday, and we compared that to other markets. So it's a little bit like looking at, you know, the XLE here as wave 1 up here and a wave 2 here. That's what it's like looking at, you know. So it could be more bullish. Like, it doesn't matter what's going to happen here for this market and the crude market. Is in one way or another, we're going to get 5 waves down. We're going to get this here, and we're going to get this here, and then we'll look at it. As soon as we get an impulse wave here, we're going to buy the pullback, and then we're going to be off at that point. Now, it's how deep it comes is the whole question, you know. So that's all. It's all pretty sort of simple. It doesn't really matter too much. But there's no trade here at this stage, so this is coming down nicely. We'll count down 1, 2, 3, 4, 5 here. We may need to extend it down further. This might be just 5 waves for the first little leg here, for 2 and 3 and 4 and 5 down here. So, and then the B wave, and then the C wave, all of that sort of stuff, you know. I'm not interested in shorting this here. I'm more interested in just being patient and you know, just chilling to pick up, you know, the long trade here. So yeah, we need to figure this out here. If this wave 1 is over here, then this is going to be deeper here, and it's also going to give us a much stronger basis to go long at. If this one over here, we can trade this up here, but we have to then wait for this. So kind of good to get things out the way straight up. So it'd be nice to have that there, but you know, I ain't the boss, so I just got to wait and do as I'm told. So that's that. So the question is, next is, you know, you'll see this in the oil stocks as well, and probably some of the gas stocks as well, depending on what's what, you know, the XOM and ExxonMobil and so on and so on. So anyway, that will give you I'm just going to leave that there, actually. That will give you some idea. So I'm not going to worry about that too much. Okay, so yeah, natural gas has fallen a bit here a little bit. So yesterday we talked about this market in terms of the futures here and so on. So basically what we said about this here yesterday is that we could count this move up. The point being, this is either wave C or it's wave 3. So if it's wave 3, then we're going up for a wave 4 correction over here, which is pretty likely, actually, based on what I can see here so far, unless you want to look at that as wave 1 with an A and a B and a C here for an expanded flat, and then so on and so on. There's different ways to look at this. We'll look at this. But the point being here is that it does look like it's at the 250 here. It looks quite, it's made an effort here. It's come down, it's found buyers here, found support, tested the lows again, found support here, and it's really made an effort to have this as resistance and then get to support here. So all we really need to do is try to sort of identify a breakout here. But the thing is that these are the current highs here at the moment. So we kind of want to break above and then come back and test those highs, and then we can go from that point. It'd be something like that. So we've got to be a little bit careful here. It's nice to see that one being tested here, taking the wind out of the sails. And we can look at this one here in 5 waves, this little move here in 5 waves. We could look at that in 5 waves. We could look at this in 5 waves. You could probably count it a little bit differently as well. There's problems with it, it's overlapping and a few things. But yeah, so anyway, let's just go in here and we can see this. I'll come back to this 1000 here. I just want to go to my 50 tick charts here for a moment. So, if it is wave 3 here, then wave 4 is going to be up here at the 38.2%, up at the $4 mark up here. This is a CFD product. So yeah, we talked about it. Like I said, you can count this. It doesn't really. You can count this in many different ways. We've got 5 waves down here, so we need to really bring it as a bullish move. We need to bring it in as a C wave and not wave 1. We thought about wave 1, but if it was going to be wave 1, then this would be the ABC here, which I thought was sort of natural as well, and would come down from that point. But the fact that it's come up here, and this is too big here to be a wave 2 against that wave 1, so that's not going to play. So this being an A wave here, then an ABC for the B wave and the C, it wouldn't be far wrong, and then this one here, you could probably put the A wave here as well. But there's different ways to put all this together, but I do think we're in wave 3 and we'll be going up for wave 4, and we need to basically push higher here. So obviously I've done my little drawings here, so I'll just remove those. So obviously it's touching on the $3, so that's that's a good sign, and it's just natural for it to react at that point. So perhaps we can, there's different ways to count this up here. It doesn't count very well here for this, to be honest. So yeah, we've been looking at the natural gas fund, and we can look at that as well. So we're probably going to see some sort of, the normal thing for here is that it'll have the arrival, have the reaction here in 3 waves. I'm just dramatizing the size of it, and then have the first high above the level, and then have another sort of whack at it, trying to come back and test these highs here. It needs to break out from those highs and then come back and test it, and then sort of push off. So it's going to be something like that at the $3. Our job is to try to get into the pullback here somewhere, buy the dip, as the kids say, and then look to try to build on that a little bit further. So that's kind of it. This wave count that's coming up here is, this one here is pretty spiky and whatnot, but it's probably the best way to view it. Let's go back to the 1000 tick area here, and yeah, so we can squeeze 5 waves out of all of this here, but originally it counted better as being corrective. This one here, I had wave 1 here and 2 here. I could put wave 1 here and 2 here, or I need to put this wave 1 over here. I'm not sure of the best thing. I'll just wait, because it's sort of following its little buddy crude. We'll just see if we get this 5-wave structure down here as 1, 2, 3, 4, or even 1 and 2 and 3 and 4 and 5 here. And if that's the case, we'll pick it up tomorrow. We'll get some sort of ABC and a pattern like this as well. So anyway, we're in that reactive corrective stage here. So we may need to put this over here. We'll just keep a bit of an eye on it. And even if it does just push up here, it doesn't matter, because we'd catch it. If it's going to run, it'll still have something like this here. It would still have a little dance here. We get it over here, but otherwise we've got to get it back here. Even when it comes back here, we'll get the A, the B, and the C right. We'll still need to look for the little first impulse wave to the upside to make a move on this. And the idea would be to get a couple of positions under this number here, and then build on top of that number. That would be it. But if it's going to tune in with crude, we'll need to track it. track them together, bring them together. Alrighty, I'm going to call it at the end. Thanks for tuning in. Cheers.